Hello everyone, welcome to the Ichimoku daily analysis for light sweet crude oil for Friday, September the 4th. Well, another indecisive candle today. A small red body today with a large shadow on either end, and that represents indecision, although the bears have made a small amount of net progress on the day to the downside. And the close is below the previous close, reflecting that the bears are showing some sort of keenness, although they're not showing any sort of keenness that we saw previously in this first time frame downtrend here. Now, we have had a change of trend to the downside today. There has been a change. The previous day we had a change of trend to the upside. It was on a very indecisive candle and the market couldn't go on with it. So now we have a change of trend to the downside, a lower high and a lower low, on another indecisive candle, but even though it's indecisive, it still is probably slightly more bearish than the previous candle was bullish. So there is a chance that this downtrend will continue. So we need to keep an eye on the low of the current candle for an assault on the Kumo or the cloud. Now, if the market does continue to trade off, which we expect it will, because we are in a second time frame downtrend, here we have a peak, a trough, a lower peak, a lower trough, once again another lower peak, and if we take out that trough there, we'll have another lower trough. So a continuation of the second time frame downtrend. We should look to the cloud or the Kumo for potential support. Now, the Kumo is very, very thin, and that means that there's not very strong support down below here for this market. So in the next few days, and especially over the next week, if the market does trade down to these levels, there is a very strong chance that the market will take out the Kumo. And the bears will be looking to a very strong bearish close down below that Kumo for the market to sell off fairly substantially. If it does sell off, then we have support down here at this previous swing low at roughly about $63. We have potential support down here roughly about 65 or so. So if we do trade down through there is an area where we can hold up, but not a lot of support down below that, down to, we could even trade down to around 60 if that's taken out with a bearish close. So what we need to do is just look at how the trading develops, read the short-term dynamics, what's going on with the bulls and the bears and what the candles are telling us, and react appropriately if we do find support or resistance down around this level. If the market does trade up from here, then we have this swing high at roughly $69 to trade through, and then these areas of resistance all the way up to 75.